So the bottom line of my opinion is that Lentor isn't just another new launch, it's actually shaping up a new hotspot for upgraders. And actually the demand is actually looking quite solid if you ask me. So the big question really is whether Lentor is really facing an oversupply issue. Hey everyone, I'm Trisha, and in this episode of Property Investing with Trisha, we'll be sharing about the breakdown of Lentor Central Residence. Today we are diving into one of Singapore's most exciting new launches, which is in the very popular Lentor Hills estate, Lentor Central Residence. So let's take an overview of the whole Lentor area, which is also the growing estate with strong demand. Firstly, let's just to give you a bit of an introduction. If you haven't really understood where Lentor Central is, it is actually right next to the MRT station. There are many plots of land that have already been sold and launched, and the response has been great. Of course, also we have the first development, which is the integrated development called the Lentor Modern, followed by various new launches like Hillock Green, Lentor Hills Residence, and the latest launch before this one is called the Lentor Mansion, which is almost sold out. All in all, there are supposed to be 3,000 to 5,000 residential units here, and with a balance of about 100 over units. From here, you can see the pent-up demand for this estate. But with 3,000 to 5,000 residential units planned across multiple developments, some buyers are concerned about the oversupply. Starting off with some project details, Lentor Central has 477 units and its completion is set for 2030. Talking about the TOP, potential buyers have asked me about Lentor Hill, Hillock and Lentor Mansion, and Lentor Real launching and completing around the same period. So is this an oversupply? But here's the good news, guys. Once Lentor Modern TOP, which is much earlier, Lentor Central will be next in line. Well, this actually gives us the advantage because we won't be caught in the middle of a big competition wave. The key is we don't want to be stuck fighting for attention when so many projects are competing with the same pool of buyers. By the time Lentor Central is ready, those buyers who are interested in the area will have already locked down units in nearby developments. This means that people waiting for Lentor Central may not have as many options to compare to, which works in our favor. Well, just to touch on the convenience of the Lentor area, most of the hype revolves around how close is it to notable schools such as Anderson Primary, Ang-Mo-Kio Primary, CHIJ St. Nicholas Girls School, and Mayflower Primary School are all within 1 to 2 kilometers. So the proximity to schools is a key highlight, especially since it's not easy to find new launches that are within walking distance to both an MRT station and also the school as well. So if you look at Lentor MRT, it serves the Thomson East Coast line, and just 2 stops down, it will bring you down to the interchange with the Cross Island line, which is set to be completed by 2030 for the east side and also 2032 for the west side. And in this line, it's a little like the PIE of the MRTs. It stretches and crosses from the east to the west of Singapore. So this will bring more convenience to the residents in the whole Lentor area. So if we look at the land brick pricing and the competitiveness of the place, since the government has launched different GLS, which is government land sales, across different quarters and years, this particular plot of land only received 2 bids, which got me really curious. This is supposed to be up and coming residential estate in Singapore with a lot of new GLS and upcoming transformations. So after looking into it, I noticed a downward trend in land bid prices, with this site costing at 982 PSF per plot ratio, one of the lowest in recent years. This signals that developers are being more cautious because of the increasing supply in the area and because for the need for competitive pricing as well. However, if we were to look at the recent transactions at Lentor Mansion, which is about 2,000 to 2,003 per square feet, it shows that prices remain stable. And this suggests that while new supply is coming in, the demand is actually holding strong as well. This means that for buyers like yourself, the next launch could be priced more competitively, reflecting a balanced market rather than an oversupply. Now, to introduce you to the 3 different developers behind Lentor Central. Lentor Central is a joint venture by 3 of the Singapore's most reputable developers, which is Hong Leong Holdings, Guaco Land, CSC Land. These developers have a proven track record of delivering high-quality, well-designed projects. With 477 units across 2 blocks, 2 different postal codes, this development is designed to cater to a wide range of buyers, from singles to growing families. So now let's look at the site plan as well as the unit distribution, which is designed for modern living. So just to give you an idea of how this will look like, let's take a closer look at the development itself. Actually, the blocks are cleverly placed to face either north or south, ensuring ensuring optimal sunlight and ventilation as well, because when you are north or south facing, you do not get afternoon sun as well. The unit mix ranges from 1 to 4 bedrooms, with most units being 2 and 3 bedrooms, which is great. Don't worry, because if you are not sure which is the right fit for you, we will be doing an analysis at a later part of this video. Now let's take a look at the facilities. Lentor Central Residence is packed with over 20 facilities. So these include 3 lap pools, with one being the stunning 24-meter lap pool, and there is also a sky terrace and rooftop pavilion at Block 18. So if you love unwinding with panoramic views, it's perfect. Lentor is also good for families, as there are family-friendly amenities such as the kids pool, playgrounds, and also the tennis court. Some luxury amenities include a gym and also a yoga and library, and even a pool reading lounge. Because these developers have done so many projects, they kind of know what buyers are actually looking for nowadays. It feels kind of like a resort, right? So exactly who are these buyers who will be buying Lentor? What are the demographics that we are looking at? So the next important factor when discussing oversupply is before you decide on getting a unit, you want to know who is actually buying here, because understanding the demand can make a huge difference in your investment outcome as well. For Hillock Green, most buyers are coming from District 19, 20, 23, 25 and 27 as well. These are actually areas with a lot of newly MOP'd HDBs that just turned 5 years, as well as ECs as well, which is your executive condominium. For Lentor Hill residents, some trend mainly buyers from the District 19, 20, 25, 26 and 27, and even Lentor Modern with its integrated mall is seeing demand from these same districts as well. So what does this matter? District 19 covers areas like Serangoon, Sengkang, and Hougang. District 20 includes your Ang Mo Kio and Bishan. Districts 25 and 26 would be your Yishun and your Sembawang area as well, and the Lentor area of course. So these places have a ton of HDB upgraders selling their flats to move into Lentor area. So the bottom line of my opinion is that Lentor isn't just another new launch, it's actually shaping up a new hotspot for upgraders. And actually the demand is actually looking quite solid if you ask me. If you're thinking about it, now let's take a good time to dive in. So moving on to the floor plans, I've come across some really nice practical layouts that you can look at. And when I saw the quantum, I was really excited by how attractive this project is, because if you look at the key focus is to understand the type of the supply in this area, as there are already so many projects around and they be all your future competitors. So the big question really is whether Lentor is really facing an oversupply issue. So now let's take a look at the 1-bedroom units and whether they are a good investment. There is only a 463 square feet size. It's actually smaller than other launches if you realize, which this also translates to a lower quantum and higher rental yield. Many people also assume smaller units are easy to rent and sell, but in this market that's not always the case. If you look at many districts in Singapore, you actually notice that a lot of 1-bedders now in the market are struggling to exit. So let's compare the two stacks, Stack 11 and Stack 6. They are of the same facing. However, if you look at Stack 11, because it's pool view, you might expect a slight premium. Of course, the developer will price it slightly higher than the stack without the pool view. The key issue is whether there's an oversupply of 1-bedroom in Lentor Hills estate. If you look at the 1-bedroom supply, there's about 20% of it out of about 10,283 units are 1-bedroom. So the key issue here is, which also this could explain some selling difficulties in future. Compared to Hougang, which has small condos, Lentor is mostly surrounded by industrial or landed properties, with only 2 condos being Thomson Grand and also your Meadows at Pierce. Excluding the Lentor Central, just 184 units out of 2,477 units in Lentor are 1-bedrooms. So this is due to URA's 85 square meter rule, which limits small units in new projects. So developers are now also focusing on the larger units, making 1-bedders rarer in the future. So in my opinion, it might be slightly challenging if you want to resell a 1-bedder in the market in future. So while Lentor Hills is often seen as an oversupply, it's small compared to Treasure at Tampines, one of the most popular launch in Tampines, which has 2,002 units in a single project. Despite that, Treasure remains profitable, showing that choosing the right unit also matters more than sheer supply. So if you already own a 1-bedder in an oversupply area, it might take longer to appreciate. Or if you are looking for an investment, Lentor could be a better bet. Fewer units might also mean a stronger resale potential and stable rental demand as well. The right project matters as well. So facilities, facing, layout, and even the batch release of units all affect your investment returns. So the estimate rental yield of one bedroom in Lentor, if we look at a case study of Meadows at Pierce, one bedroom rentals, the closest comparison is Meadows at Pierce, where one bedroom rents for about 3,000 and two bedrooms for about 3,500. So some may worry that Lentor Mansion, which is about 527 square feet, you could draw buyers from Lentor Central, it being 463 square feet. Now, if we look at the exit strategy, if Lentor Central is bought at 2,300 PSF, which is about approximately 1 mil plus, renting at 3K gives you a rental yield of about 3.3%. For Lentor Mansion, 527 square feet, probably about 1.2 mil. Renting at about 3,500 gives you a rental yield of about 3.4%. Lentor Central rental yield actually remains competitive. Alright, let's dive into the two-bedroom units at Lentor Central. We are going to break it down, okay, and compare it with the other developments in the area. So this will give you better clarity of what's out there. First up, there are actually no two-bed, one-bath units. The smallest unit actually is the two-bed plus two-bath units. So there are only two sizes, the 678 as well as the 8689 square feet in very different layouts. So if you were to look at the layout, there's only one classic layout, which is this is the Type 2B, the 689 square feet. This is your traditional straightforward design. There are two layouts, dumbbell one, which honestly now is pretty common in the lots of development nowadays. One of the total units, 53 are dumbbell layouts and 26 are non-dumbbell. So if you are someone who prefers classic layout, you have got fewer options, which also means that there might be more demand for buyers looking for this particular layout. Now, here's something interesting if we look at the Lentor Central 2-bed 2-bath unit. The kitchen, most 2-bed 2-bath units, you have seen that the kitchen only have open concept, right? At Lentor Central, they actually have this enclosable kitchen with a glass panel. So it might be a small detail, but it makes quite a bit of difference. It's not something that you see every day, and if I'm a 2-bed 2-bath owner buying for own stay, this is a great plus point. So what does this mean for Lentor Central? Well, the reason why we are comparing is because I want you to understand how much these units in Lentor Hills and Modern are transacted at. If they launch at a starting price of about 1.35 million, it's pretty competitive. And looking at Lentor Modern and Lentor Hills, there's a good chance Lentor Central units could hit about 1.67 million in the future, because look at Lentor Modern, the highest price there is 1.67 mil and people still bought into the unit. So that's something to think about it if you're actually looking for investment for a 2-bed 2-bath. So now let's move on to the 2-bedroom plus study units at Lentor Central. You have got two sizes, 786 square feet and also the 797 square feet. Four different kind of layouts. The layouts are all pretty similar. They are the dumbbell style layout and just small differences in the foyer area. The most direct competitor here would be Lentor Mansion. There are 2-bed plus study units have a bigger glass panel in the kitchen, which is actually a nice touch if you ask me. But overall, Lentor Central layouts are still very competitive. The 786 square feet unit is actually the one that most of my clients and everyone is eyeing at, because it's spacious, well designed, and honestly it's also the top choice if you can get your hands on it. Plus, because the glass panel in the kitchen is also bigger, the 797 square feet one, your kitchen will be much brighter as well. Well, my suggestion of the layout would be the Type 2B, Stack 18. It has a traditional 2-bedroom layout with enclosable kitchen, which is rare because if you're buying for own stay, you'll want something that is enclosed. And in terms of the 2-bedroom layouts of Lentor Hill Estate, there are about 718 dumbbell layout and approximately 249 traditional layouts. At the end of the day, it depends on your strategy, okay? If you want something unique and in demand, you can go for a traditional layout. So if you're okay with a more common design and something that a lot of buyers will buy from you in future, the dumbbell units are actually a pretty solid choice. So now we look at the 3-bedroom compact unit, which is the 915 square feet. The layout is a major plus because there's a window in the kitchen, toilet and the corridor keep the unit bright as well. And the quantum remains very attractive. There are only 53 units of this such layout, making it a very rare find. So if I'm a buyer, the closest comparison is Lentor Mansion 786 square feet unit, but it lacks these features for HDB upgraders in Ang Mo Kio looking to stay near their family. This actually is the ideal choice at an average of about 2250 per square feet. So as low as about 2000 per square feet, the total price is going to be about 1.8 mil. So this is one of the best value buy in the 3-bedders in this whole area. Now, if you're able to secure a unit at Lentor Central at about 1.8 to 1.9 mil, you are already doing great. Why? Because Lentor Modern units have already transacted at 2.1 million. So by purchasing at Lentor Central for 1.8 to 1.9 million, you are essentially buying at much better than those who paid 2.1 million in Lentor Malden. It's like buying in at day one prices, but now you are getting the advantage of knowing that the price have already appreciated. So this means that buying at this price point is actually a safe investment, as the resale value is likely to continue to go up. So a 2.5 mil in resale will be very likely, or even conservatively speaking, a 2.35 mil will also work as well, which still means a very good profit if you're buying at 1.95 million. Moving on to the 3-bedroom premium unit. So this one comes in a single floor plate size of 1,706 square feet and offers 2 different layouts. One of the standout features here of this layout is the kitchen, which has a beautiful glass panel that really brightens up the space again. It's quite unique and something that you don't often see in other developments. Another standout feature would also be the WC window, and this is actually adds an interesting touch to the layout as well. And now, while I like the layout in general, the main concern here is the size gap between this and the next jump, which is the 4-bedroom. The difference is only 108 square feet. This doesn't seem much, right? But in terms of quantum, it adds about 200,000 to the price. And because the compact and premium 3-bedder, the size gap is pretty big, and the added features is like a larger kitchen, bigger master bedroom, and a home shelter. But you are paying a lot more for a relatively small increase of space of about 161 square feet. So that's something to think about. So this means you are essentially stuck between the compact 3-bedroom and the premium 4-bedroom, where the compact 3-bedroom still seems to offer the best value. So personally, for my top choice would definitely be the 3-bedroom compact. Now moving on to the 4-bedroom compact, we have the 1184 square feet, 2 stacks. The key highlight is that it's efficient in space, and also it has a spacious walk-in wardrobe. Well, what about the downside? Only 2 bathrooms. However, compared to the 3-bedroom unit, you gain an extra bedroom. And actually at 108 square feet for the wardrobe, and making this about a 216,000 price jump at about 2,000 per square feet, which is reasonable at 2.3 million. This appeals to HDB upgraders looking for affordability and efficiency in a HDB dominant estate as well. So if we look at the premium 4-bedroom, 1399 square feet, 2 stacks, offering a 5.35 meter long living room, a larger kitchen with yard storage, and a 3rd bathroom as well, adding 215 square feet for 400,000 more, pricing it at 2.6 million. While this provides more space and luxury, the ROI is similar to the compact, and resale also might be harder due to the area's lack of demand for larger units as well. So comparing to Lentor Hill Residence and Hillock Green, Lentor Central's this 1399 square feet unit stands out with a well-designed living space if you ask me. However, Lentor Hill's layout actually has a drawback. This metal windows support that limits the furniture placement. So this gives Lentor Central the edge in layout efficiency. So our recommendation is that if you are looking for a safe, solid investment, the 4-bedroom compact is a great choice. It's affordable and it's also getting a lot of value for your money. But if you are buying for your own stay, it will be a better consideration for the 4-bedroom premium. So now to conclude, is there an oversupply issue in Lentor Central? It doesn't really appear to have an oversupply, but while there is a still availability of units, the development's market demand is balanced, driven by strategic pricing by the developers and also the appealing different layouts that we have, especially for future HDB upgraders. Well, the pace of sales of the project will then depend on how well the project aligns with buyers' preferences for unit, size, facing, and also the affordability. So as long as the pricing strategy is effective, there is a good chance for continued demand, making oversupply unlikely in the long term. So now this wraps up our analysis for Lentor Central. We have covered everything from the layout options to pricing strategies, and we hope this helps you to make a more informed decision. Remember, there are still units available if you are ready to take the next step, and I'm here to guide you through the process. So if you have any questions, don't hesitate to reach out. I'll see you again in the next series of Property Investing with Trisha Chong.